3, 2, 1, 0, and liftoff.
Welcome to Mission CTRL, Peralta Design's podcast on all things branding and digital marketing. Since 2008, Peralta Design has launched hundreds of brands with award-winning identities and websites. Join our hosts Ramon and Jorge as they use decades of combined experience to tackle topics with past clients, industry partners, and the rest of the PD crew. At Peralta Design, we launch brands. But for now, let's launch right into this episode of Mission CTRL.
All right, welcome to Mission CTRL, where we respect the grind and reclaim the American dream. I am your host, Ramon Peralta from Peralta Design, and we launch brands. I'm very excited today. We have a special guest. He's a PD client. He is a fellow networking and diners member of the Rob Thomas method. He's been trained in the Rob Thomas method of networking. He's a certified public accountant in Connecticut since 2019. He's worked at 2 different national accounting firms before recently launching his own practice. He's dedicated to helping the small business owner as an entrepreneur himself. He really knows how to navigate an ever-changing tax landscape. He's a very bright young man. I'm glad to have him here. Please help me welcome the founder of Elblein CPA, Ryan Elblein.
Thanks for having me, Ramon.
Yes. Thanks for being here. Ryan, who are you? Tell us your best backstory.
Yeah, so first I just want to say, thanks for having me, and this is actually my first podcast, so, you're the first one. But a little bit about me, so I grew up in Long Island. I was there until middle school, moved to Connecticut for high school. Then I kind of never left. I mean, my mom moved around a little bit, but I stayed here, went to school here, went to University of New Haven, and during that time, I got into accounting. I started going there for criminal justice, but had a professor that kind of helped me see that I would actually do a little bit better in accounting. It came kind of natural to me. And once I started doing that, I kind of never looked back. I got an internship at one national firm, and, one thing led to another. They gave me a job, and that's what I've been doing ever since.
Wow, man. I mean, math is something that I've always grappled with. It wasn't my strong suit, which is why I draw pictures for a living. I guess the cumulative nature of it, whereas like if you're not paying attention that one class, the following class, the formulas are using something from the prior class, so it's, I think it got as far as, I want to say calculus, maybe.
Yeah. It all builds on each other.
Exactly.
I mean, if you don't understand the beginning, you're not going to understand, 2 years later. So.
And you just naturally were good at math from an early age?
Yeah, I mean, I was good at math. Luckily, I had a cousin, too, that was great at math. He ended up being a math teacher, so anything that I had problems with, he was a little bit older, so he's already dealt with it and could help me figure it out. But, yeah, I mean, math kind of came naturally. And even with accounting and taxes, too, it's more than just math, too. It's it almost kind of mixes in law a little bit when you deal with taxes. So it's not just knowing the numbers, but it's also kind of knowing what's going on with the law and trying to figure out a changing landscape. So
right. Well, you picked a great state, Connecticut, because I think we probably have the most taxes.
Yeah,
or most tax laws.
Yep, one of the top, absolutely.
They tax you for something that you own. They tax you when you bought it. Then they tax you for owning it.
Oh yeah.
And then every year they want to know what else did you get? What's in your office that we can tax you on?
And they even want to tax you if you buy it somewhere else and bring it here.
And now they're taxing things that aren't even in the real physical world, like digital assets or digital services are now being taxed. So we're gonna dive into some of that. So. When you were a kid, what did you dream about? What did you want to be when you were, thinking about growing up and so forth?
Yeah, so I went through kind of all the typical things, police officer. I had a couple neighbors that were police officers, so I kind of wanted to be a police officer at one point. And then it was, I played baseball, so I really wanted to be a baseball player. I was a catcher from the first time that they had catchers in Little League, and I always wanted to be like Mike Piazza and, big Mets fan. So I wanted to do that, and then I kind of realized, all right, well, I'm not good enough to be a pro baseball player. Then it kind of turned to business. I mean, I've always kind of had a knack for business. I've always kind of been a little bit of like a hustler, I guess. Even in middle school, you had the lemonade stands and stuff as a kid, but in middle school, I actually I used to sell juicy fruit gum to kids. I'd go and buy the little 25-cent packs of juicy fruit gum, and I'd sell it to kids at school for 50 cents a piece.
Nice, 100% markup.
Exactly. You know, it was a great business. And then I turned that into, you know, high school. They had that new 5 gum came out or whatever, so I would sell that to the kids in high school, and you know, anything to kind of try to, you know, make a little business. So I was always about business, and I said, you know what, someday I'm gonna own my own business, and that's kind of how I ended up here. So.
Yeah, I love it, man. You reminded me of a high school buddy of mine that was most recently mayor of Cranston, Rhode Island, Alan Fung. And in high school, Alan Fung used to sell blow pops, I guess his dad had a store or a Chinese restaurant. I don't know, but the guy was a hustler. And I admire that, you know, that business savvy from an early age and understanding, you know, buy low, sell high, and make a profit. And I think those are valuable lessons. And I think one of the things when you mentioned in our pregame that you were like in 4th grade during 9/11, and we're about to go into the anniversary of it, it reminded me how young you are. And I think that for a young man, you know, you are well ahead of the game, you know, because you got your own business, and we're going to talk about that. But you've already had a chance to work at 2 large firms. So for those that are up and coming, the listeners that are out there, what was that transition like coming out of college into getting your first job? Like who gave you that first opportunity?
Yeah. So, the first opportunity I had was my internship, and I had it my junior year of college. And frankly, I didn't think I was going to get one, at least not for the company that I got it for. It was one of those things. I said, you know what? I'm just going to apply. I'm going to see what happens. What's the worst going to say? No, you're not going to. You know, we're not going to take you. So I did it. I applied, and sure enough, I ended up getting it. And I started there, and I just figured, all right, I'm going to work as hard as I can, learn about what it's like, see if this is what I want to do. And then at the end of my internship, they said, okay, well, we know you're a junior, but when you graduate college, here's a job offer.
Wow.
So, you know, and then I kind of just said, all right, well, now I got a job. So senior year, why don't you guys bring me back again? Because, you know, taxes are always changing. My internship was in tax, and taxes are always changing. So I'm like, why don't I come back my senior year, keep everything fresh, keep growing. And then by the time I actually started the job right out of college, I already kind of had a good background in taxes. So I didn't have to worry about, you know, all the learning that a normal new staff does. I actually got to start working on more returns and kind of building myself up. And I always just kind of looked at it as a learning experience. You know, you learn as much as you can, and that's what's going to help you grow into the future.
Yeah. Well, they obviously saw something in you when you said working as hard as you can. What's some of that work ethic that you can share? Like, what are some of the tips for landing that first internship so that you stand out?
Yeah, so one of the things that they wanted to see on the internship was obviously that I was involved in stuff. So it's one thing to have good grades, but it's another thing to have, you know, at least decent grades and be involved in whether it's, you know, a club at school or a job, or just show that you're doing more than just going to school. And then as far as the work ethic goes, I mean, in accounting, it's one of those unfortunate things, but it's just how public accounting is. You got to put in the hours. You know, I'm kind of hoping that starts to change, but the way it was when I started school, it was just you put in the hours. I mean, even my spring breaks and stuff, I wouldn't go on spring break. I went and worked, you know, 55 hours that week because I was an hourly employee and I got time and a half for everything over 40 hours. I mean, I knew I could make good money that way, and I think that's part of what helped me get a job is they saw that, okay, well, I could be out, you know, partying on spring break like every other college kid, but instead I'm here. You know, we had tax returns that needed to get done. There's deadlines that are there, and I was like, you know what? I'm going to work it. I'm going to make myself some money, and I'm going to learn while I'm doing it.
Right. No, that's awesome. Now, you're a normal person, right? Entrepreneurs aren't normal, and we want to get into that a little because our audience and we launch brands and all that good stuff. But for many people, landing the job would have been like, okay, my box is checked. I'm just going to do this every day until retirement. But for you, what was that aha moment where you said, okay, I'm working here, but I still want to do my own thing?
Yeah, I mean, I think it goes back to when I was a kid, and I always knew I wanted to work for myself at some point. I didn't know exactly what it was going to be. I didn't know, you know, what industry I was going to be in or what kind of business it was going to be. But I knew at some point I wanted to work, you know, for myself. And as far as the aha moment for starting Elblein CPA,
during a pandemic, no less.
Yeah, nonetheless, during a pandemic, it was actually back in January of this year. And my wife's coworker, her boyfriend had a business, and he made a ton of money during the pandemic. He made some smart decisions. He was really lucky to make money, and he needed an accountant. I mean, he had a family member, I guess, that was his tax guy, and he needed somebody else. And so, he's at my house. We're having dinner, and we're just talking, and he's like, "Listen, I could really use you to help me. I don't know if you wanted to do your own, how you want to do it, but I could really use somebody to help me." And I'm thinking about it. I'm like, you know what? Yeah, I could do this. I could help him. And then the more I thought about it, I'm like, okay, well, if I can help him, I can help other people. Sure enough, his aunt ended up needing somebody to help them too. And, one thing led to another, and I already had 2 clients. And I'm like, okay, well, now this is actually turning into something. It's an industry I know. It's something I've done for, my entire professional career, basically. So there's no better time than now. Let's just do it. Let's just start it and see where it goes. And sure enough, I've been lucky enough to pick up, a good handful of clients that really needed some help, and I've given them good help, and it's been a great experience for me so far.
Now, that's awesome. Now, 2 questions though. Were those types of clients too small to bring into the place that you were working at?
So at the time that I had those 2 clients, I was actually at working as a controller for a real estate developer. So I wasn't in public at the time.
Got it.
I've been out of public for a year and a half, I believe, at that time. And the reason I left public was because I wanted to work in real estate too. I wanted to learn that area, and I got a job working a controller for a real estate company, and I learned a lot about the inside of real estate. But yeah, so when they came to me, I wasn't working for a public company or a public accounting firm that I could bring them into. It was kind of just me on my own.
Yeah. Now, I do want to get to understanding how you establish yourself as a company. Like, as soon as you got a client, there's a process there. Like, you must have incorporated as an LLC or gotten registered with the state and so forth. But before that, just because you're using some jargon, just explain what a controller is for our listeners that might not really know how you went from CPA to controller.
Yeah, so a controller of a company, it could mean a couple of different things. Generally, the controller is the person that's in charge of the whole accounting process for a business. Depending on how big or small the business is, it could also have other things such as a little bit of HR duties or, a little more of just steering the business. It's kind of like that in between like being a manager at a business and being C-suite. Usually, like, the controller reports to a CFO if there is a CFO. But in a small business like the one I'm working at, it's really just the owners and then kind of me, and I run the entire accounting process. So it's making sure all the books are in order, making sure the taxes are getting done, kind of helping strategize. So if my boss was looking at buying a new property, I'd help him figure out, okay, well, this is what we have to do to strategize. So that's kind of what a controller is. You really kind of have your hand in everything related to accounting and finance at a company.
Now, is the difference between a controller and a comptroller? Because that's a whole nother... Right. Because people get those confused. They sound very similar.
Yeah, and so generally, I know of comptrollers as being part of like a governmental agency.
Okay.
So I believe, and I don't know a whole lot about comptrollers, but I believe that they are the same kind of role, but more governmental.
For governmental, or maybe like a larger nonprofit or something.
Correct.
Like that.
Yeah, exactly.
Okay, gotcha. All right, so now you get these clients. Because this is the meat and potatoes for our listener that wants to launch a brand or launch a business. So you get these clients. What did you do next so that your taxes are in order? Because now you're gonna invoice these guys and so forth.
Yeah. So the way I did it is, I think that a lot of people look at getting an LLC and they get a little kind of put the cart before the horse. They look at getting an LLC like, okay, I got to set up an LLC. I got to come up with a cool name. I got to do all this stuff to set everything up. And a lot of times people forget that there's something called a sole proprietorship. You don't have to have an LLC to have a sole proprietorship. LLCs in that case are really just for like legal purposes. So what I said was I had talked to a mentor of mine who owns his own CPA practice. And he was kind of just like, when I started, I just did it myself. I didn't create an LLC. I didn't create, any kind of business entity. I just did it as a sole proprietorship until I knew I had traction. And then I converted it to something else. So I'm like, okay, I'm going to do the same kind of thing. So what I did was I went to the state for a CPA firm. You have to actually get a firm license. So I applied for my firm license. I just put it under the name Elblein CPA. I didn't bother with setting up an LLC or anything because, yeah, sure, I had two clients, but for all I know, that may be all I ever had. So I decided to keep it as a sole proprietorship for now, and then eventually I will, create a business entity to make it an LLC. But for tax purposes, they're really kind of actually treated the same, whether you have an LLC or a sole proprietorship, as long as it's one person.
Got it. All right. And then you hired us to launch your brand, and that was a fun process coming up with your logo, and you got a website, and we'll talk a little bit more about that. As we wrap up, I want to give you a chance to shout out your business and tell us what kind of clients you're looking for. But so now you've got these two things going. Are you moonlighting for your own business, or you work a full day and then after work you put in a few hours?
Yeah, I mean, that's pretty much how it is. There are times during the day. I mean, obviously I'm working with business owners, so a lot of times they don't want to work after hours. So I might take some phone calls during the day and kind of organize myself so that, at nighttime after my day job ends, I can, get working on the CPA practice.
Yeah.
But I definitely, it's definitely something you have to juggle. It's interesting trying to do both, but I enjoy it, and I think that eventually the CPA practice could really grow into something. So
yeah, that's awesome, man. I mean, let's get into some of the pitfalls maybe or mistakes that some small businesses might make. So maybe just give us a segment here on maybe your top 5 tips for small business owners when it comes to their taxes.
Yeah, so I think number one I touched on a little bit is people tend to put the cart before the horse, or I actually did a video and I called it letting the tax tail wag the dog, because I think that a lot of business owners want to worry about paying the least amount of taxes possible, so they might try to do things for tax purposes that really aren't good business decisions. So yes, there's ways to get your taxes reduced, but if it's not going to really help your business, it's not worth doing.
Right.
So I think that talking with an advisor or a tax professional that can help you understand, okay, yeah, sure, you can reduce your taxes, but does this really make sense to do this for your business? I mean, I've heard of some crazy business structures that would never make any sense other than trying to figure out a way to pay less taxes.
And that could, in effect, be a red flag for the IRS if they see how you're structured, and then it's like, okay, I see what this guy's trying to do here. If you have like shell companies and one company's buying from another company to write it off, but they're all part of your parent company.
Yeah, exactly. So the IRS actually has a rule where you have to have a business purpose for everything that you do. Mm-hmm. So if you're doing things, purely for the point of reducing your taxes and there's no real business purpose to it, then, obviously it's a big red flag for them, and you're at risk of getting audited, and it becomes, a mess. Another thing that I see a lot of small business owners struggle with is documentation. So I know it's kind of annoying, and I know it's kind of a hard thing to do, but now there's a lot of technology that helps you with it. But when it comes to like meals and entertainment, anytime you go out to dinner or lunch with a client or, anybody, take a picture of your receipt. There's apps through QuickBooks and everything else now where you can just snap a picture of your receipt and it saves it and puts it right into your accounting program for you. By having those receipts, if you ever did get audited, now you can prove what you did. Another thing where I see an issue like that is vehicles. So you can write off a certain portion of your vehicles, but it has to be business use. So people may just say, oh yeah, I use my vehicle for business. But if you're going to the grocery store or you're commuting back and forth between your office and your house, those don't count for those miles. But a lot of business owners don't track their miles, which makes it hard when it comes to be tax time. And I say, okay, well, how many miles do you have on your car? Well, I don't know how many business miles I have. I commute back and forth. So it becomes a much bigger problem for us to figure out, okay, how much business miles do you have versus personal miles? So documenting everything is really important when it comes to taxes. And that can be the difference between making an audit go really smoothly and kind of having a nightmare where you have to recreate your whole life from 3 years ago.
Speaking of, this is something that because I recently was like shredding, when I moved, I had all this paperwork. I save everything. Like, how many years should you as a business owner be saving documents from? Is it 5 years or less?
So a good rule of thumb is actually 7. Okay. I don't know exactly where that rule of thumb came from. I just know that's kind of like the standard is keep your stuff for 7 years. As far as actually getting audited, it's 3 years from the due date or when it was filed, whatever came later. So if your tax return was due on April 15th, but you extended it and filed it, June 15th, it's 3 years from that June 15th that the IRS has to audit you. Unless, of course, there's some form of fraud or, some other big misstatement like that. But Usually it's 3 years the IRS has to be able to audit you, but they say keep 7, can't hurt.
Okay.
It's good to have.
All right. Any other? I don't know if I think we only got to like 3 of them of your tips. So and then I interrupted you. So go ahead with some other things that you think would be things to look out for as a small business owner.
Yeah, I think small business owners definitely need to have a good advisor on their team.
Mm-hmm.
I think that a lot of times a small business owner will look at having a CPA or some kind of tax professional on their team as a cost that maybe they don't need. There's a lot you can do with TurboTax these days, but the problem is that the tax world is so ever changing that, and it's become even more rapidly over the last 3 years, that trying to do it on your own is near impossible.
Yeah.
Sure, you can file something on your own, and it may be right, it may be wrong, but it's just not worth the risk. So I definitely advise anybody that has a small business, at least talk with a CPA or an enrolled agent, which is another tax professional. At least have a conversation, because they're not going to charge you to have a conversation, and you'll know right away if it's worth it for you or not. And along that same lines, make sure you're vetting who you're using. I've seen actually, in the short time I've been doing this, I've seen 2 or 3 people now that had prepared returns and they either were blatantly wrong, where the client never even provided information that made it on the return, or they just made mistakes that are just, accounting 101 mistakes that shouldn't have been made. So definitely vet the person, talk to their clients. If they should be able to give you a name of at least one client that says, here, talk to this person. Ask them questions. Don't just take the fact that they have a certification for granted. I mean, yeah, it's not easy to get a CPA, but it doesn't mean there's not bad CPAs out there. So make sure you're asking them questions and saying, okay, well, how do I run, what can I do to run my business better? Or if you were to look at my tax return, what do you notice on my tax return that maybe I could do better or I'm doing wrong? If they say, oh, yeah, it looks great, everything's great. Well, chances are they're either not looking deep enough or they may not know enough about your industry, because usually there's at least one thing that can be changed.
Got it. What are some advantages for, people always hear like, oh, you can write that off, or you can write things off, and I've heard people say, well, you can write off anything you want. It's just like, are you going to be prepared to back it up? Should you ever get audited? So let's talk about some of the benefits of having a business when it comes to taxes.
Yeah. Well, so it's funny that you say the word write off, because I just did a video on that too. So it's funny because the word write off, right, traditionally is if you had like AR or accounts receivables, and you weren't going to collect that money, you have to write that balance down or write it off. But generally, like in the terms you were using it, which is commonly accepted, it usually means deduction. So you you pretty much can deduct anything, but the caveat is it has to be ordinary and necessary to your business.
Right.
So yeah, pretty much any expense in the world can be expensed to some business, but can it be expensed to your business is what makes the difference. I've heard of people expensing their vacations before, and it's totally legitimate because they had a reason to go expense it. Now, sure, they can't expense the whole thing, because if you bring your family with you, like there was no business purpose for your family to come with you.
They can't say it's mental health, because that's probably the cause of
exactly.
the damage.
Probably adds to the stress, if anything. But, if you go and travel with your family, there is a portion you can write off if you're going to do business. If you're in real estate and you're going to look at properties down in, say Florida, you want to go look at some Florida properties, you can write off a portion of your travel to go look at those properties. So there is a way to justify just about any expense. It just depends on whether or not it applies to your specific business.
Right. And I think, you're obviously championing for the small guy or the common man, but I just saw something today, a picture of Elon Musk, and it says, like the ultra wealthy have avoided $160 billion in taxes. You recently had Bezos, out in space and people complaining that he's not paying his taxes. I've also read about the loopholes, and of course it's because the wealthy, can afford the lobbyists who influence the lawmakers, that you can have somebody, I've heard of this. I can't give you a specific person's name, but like, let's say a guy has 100 acres of farmland and he puts a sheep on it. Now that, because he has a sheep on, that helps him not have to pay taxes, because there's some weird law that if you have a sheep farm, you don't have to pay taxes. Yeah, I'm making that up.
Yeah.
But there are like a lot of these loopholes that the ultra wealthy seem to be able to take advantage of. And then the feeling is that the small guy or the small business owner or the average working guy trying to raise a family is getting squeezed and paying the highest tax rate, the most taxes. So there's always this kind of like socioeconomic animosity and it boils down to who's paying their fair share of taxes. So what's your take on that, and what would be a fair share? Should it be like everybody pays the same percentage, or how do you feel?
Yeah, well, so there's a couple different ways to look at it, right? So the first thing I'll say is that one of the biggest things I see is people say, oh, well, Bezos and Musk didn't pay any taxes, okay? And to some extent, that's not incorrect. I mean, they may not have paid income taxes. There are taxes.
And we can't let Richard Branson off the hook either. He's another one.
Yeah, exactly. And I'm sure they paid some form of taxes, but they didn't pay income taxes.
Mm-hmm.
And the reasons that they didn't pay income taxes, without actually being able to see their returns, but I did read some of the articles.
Yeah.
But my guess is the reasons they didn't pay income taxes is because they actually put that money into other businesses and were able to write off the losses from the other businesses. Now, whether that's right or wrong, I know there's been talk about how they can take loans out against their securities and they don't pay taxes on that. And that should be looked at, and we should figure out, okay, well, are they really using the money without paying capital gains? Is there a way to look at that? I will say for the average person, right, if you have a W-2 and you just work a job and you don't own a business, you don't own any assets, unfortunately, you're not really going to be able to reduce your taxes at all. The only ways to really do that is by, making charitable contributions and,
right.
and owning houses and stuff like that. But even that can only go so far. So for the average person that just earns a wage, unfortunately, the way our tax system works is you're really taxed on when you work for your money. You're not taxed so much on when your money works for money.
Got it.
So if there's anything I could say to people that want to pay less in taxes and want to make more money, find something to invest in. Start a business.
What if they invest in crypto? Are they taxing that yet or no?
So you can invest in crypto. You are taxed on it,
Okay.
but it's not taxed on the ordinary rates like your wages would be. It's treated as property as of right now. There's talk that they're going to change it. There's talk that they may start to make it more like a security, like a stock. But as of right now, it's treated as property. And the issue with that,
I hope you're paying attention to this here. I know you own a lot of crypto.
So the issue with it is that, and they're trying to get these exchanges like Coinbase and all that to have to report. If you have a brokerage and you have stocks, you get a report at the end of the year, 1099, that says this is what you bought and sold.
Right.
Well, these crypto exchanges didn't have to do that previously. And the problem is that crypto is treated as property. So every time that you trade a crypto coin, like if you trade Bitcoin for Ethereum, for Litecoin, for whatever, every time you trade from one coin to another, it's considered a sale of that coin. So you then have to report any sort of gain or loss that you had going from Bitcoin to Ethereum and so on and so forth. You have to report that gain and loss on your taxes as sale of property. Now, there actually is an advantage to it being a sale of property, is that there's a rule called wash sale rules, and that could get kind of technical, but that doesn't apply to crypto, believe it or not, even though it applies to stocks. But yeah, so right now it's treated as property, and that's kind of how you get taxed. It's capital gains tax rates, so it is the more beneficial tax rates, but it is still taxed, despite the fact that some people believe it's a currency and not property.
Right. Well, I see that as another niche for you, because I think it's an emerging topic of especially young people that are, we have a client, Delta Core Capital, and they're an investment firm, strictly crypto.
Yeah.
I think we had one of the principals on the show, Jorge, and he's like 95% of his assets are in crypto. I mean, he talk about all in.
Yeah.
But somebody like that who sold all their real estate and dumped it into crypto, like their taxes are going to look really different, going forward. When all their assets are in digital currency.
Yeah, absolutely. And I mean, as far as selling all your real estate, if there was one section of the tax code that I would say it has the most beneficial tax laws, it's real estate.
Mm-hmm.
So
that's how, like, Trump. I don't want to put it out there. But I mean, that's kind of how he's also his whole thing with his showing his taxes. We're like constantly in the news, but it's because a lot of it is tied up in real estate.
Yeah. So there's actually a term. It's a kind of a tongue-in-cheek term, but it's called swap until you drop.
Mm-hmm.
And I don't know how many people know what that is, but basically, there's
I've never. Have you heard of that?
I haven't heard the term, but is that about how you buy the real estate and you sell it to get another property? You basically don't pay taxes on any of the gains because you got to upgrade.
Yeah.
Pretty much just keep doing that repeatedly.
And you avoid paying the taxes.
Exactly. So the way it's using what's called a 1031 exchange. And before the Tax Cuts and Jobs Act, you were able to do it on pretty much any kind of property, like cars and anything you wanted, any personal property. Mm-hmm. That Tax Cuts and Jobs Act kind of limited that just to real estate. But how it works is you buy property A today. 10 years from now, property A goes from being worth $100,000 to being worth $1 million. And you don't want, property A anymore. You want property B instead. And it doesn't have to be the same kind of thing. It doesn't have to be apartment building to apartment building. You could go from a single family house to an apartment building to a farm to, any other kind of real estate, as long as it's real estate. And when you swap to that other piece of real estate, that $900,000 that you would have had in gains gets deferred. And the swap till you drop is you keep deferring it over and over and over again and building your portfolio bigger and bigger until eventually you pass away. And when you pass away, your children, because there's no tax on the actual transfer of the assets, they get grossed up to be whatever they're worth as of the date of your death, and your kids get your assets at that value. So all that gain that you would have had throughout your lifetime because you 1031 exchanged it kind of goes away, and your kids now get it for worth whatever it was the day that you died.
And they don't pay taxes on it?
And they would not pay taxes on it because they get it at the value of whatever. So if it was worth $1 million when you died and you paid $100,000 for it, your kid would get it at $1 million, and they could turn around tomorrow and sell it for $1 million and have no gain considered to them.
Wow.
So that's kind of how the swap until you drop came along. But that's a really popular way for real estate investors to kind of build their assets, is they just keep doing that over and over and over again. And there's a lot of rules to it. You have to be careful, but it's definitely a great tool that it has. But there's talks that may get changed in the next few months.
Awesome, man. That's something that more people need to know about, because I don't think the average person knows how that works. And so part of the resentment, and when we talk about that, it's just not understanding. We're just thinking that they're somehow getting over, and when you don't understand that none of this is actually illegal, it's just you didn't know about it, right. or it takes generational wealth to get to a point to accumulate that kind of value in real estate. So thanks for sharing that. Let's get back to Elblein, the Elblein brand. What do you think? What do you want people to think when they hear that? When they hear about ElbleinCPA.com?
The biggest thing I want them to think is about integrity. That's what I've wanted to build my business on since day one. I've always had integrity, and I think that in accounting, you might be able to find a tax professional that'll do kind of whatever and cross certain lines. Right.
The stereotype of the guy that has the blank receipt book, on his shelf. Yeah,
exactly. And it's we're not allowed to talk to specific clients about audit risk, but in general, if you looked up how many people get audited, it's usually around like 1%. Mm-hmm. So it's a really small amount of people that get audited. So a lot of people can push the limits and never get caught. But I'm not that kind of person. I've always wanted to do things, sure, there's gray areas that you can kind of take advantage of, mm-hmm. but I'm not the kind of person to just cross lines just to save somebody a few dollars. I'd rather find out a better way to do it that actually saves you money. That's more within, what's allowed. So my biggest thing is integrity. I feel like, I said this to somebody the other day. I was like, there's no amount of money that's worth my integrity. And their response was, oh, what about $1 billion? I'm like, okay, well, no one's ever going to pay you $1 billion for your integrity. But regardless, no, I wouldn't take $1 billion, because at the end of the day, if I don't have my integrity, then my name is kind of trashed.
Exactly.
And that's why I put my name on the firm, because I don't want to just have some generic, name that doesn't matter and I could throw it away and get another one. You know what I mean? I can't throw my name away. Right. It is what it is.
Right. That's great, man. That's a great explanation. Now, what is the ideal? Well, before I get there, it's something I've been wanting to ask you, because you're a young man, you're married. How are you balancing that with the wife? Does she understand that like when you get home from work, sometimes you're not going to just go plop in front of the TV with her and watch Jeopardy, but that you're going to actually like deal with your clients. How has she been receptive to you being an entrepreneur?
So I'm really lucky that my wife is so understanding of this. Lucky enough for me, when we first started dating, I was taking the CPA exams, and that was literally studying every night. There was just hours and hours of studying. There was no easy way to pass it, and I gave up like 18 months of my life to pass the exam. And back then, she got used to it, kind of understood, like, listen, I'm going to come home and I got to study until like I'm ready to pass out. And she'd fall asleep next to me listening to all the accounting jargon going on for hours. But it comes down to time management. She's very understanding that, I'm trying to do what's best for us, and I'm trying to get us to like the next level.
Right.
But so she understands there's going to be a commitment, but it's also partially on me to make sure that, I'm still giving her time, and I'm still, spending time with my family and my dog, and, we're still spending time together. So even though maybe I'm on my computer while we're sitting there watching Jeopardy and I'm doing some work, I'm still there. We're still talking,
Right.
So she's been very understanding, but it's also partially me that needs to make sure that, I'm taking care of the relationship, and I'm not just saying, hey, I got to do all this. You got to take care of the house. You got to take care of the dog. It can't be like that, because it's just not fair.
Right. Yeah. Well, I mean, not only are you well ahead of your years business wise, I think you're also, as far as wisdom and knowing what how to make a relationship work. It's just a tough balance. I say that because a lot of our listeners the entrepreneur is. Not everybody understands that lifestyle. They're not about that life, as we like to say. And I think that's part of what I like, the fact that we're networking and diners together, and part of what we search for in a peer group like that is being able to talk to other business owners. Because when you get home, and yes, you may understand you're working, but some of the decisions that you may make for your business really aren't going to be, they're not going to fly. They're just not going to get it.
Of course.
So being in a peer group is super important. Now, let's talk about the ideal client for Elblein CPA. Who's a good fit for you, and then go into a bit about how they can reach you. What's the best way to get a hold of you?
Yeah, absolutely. So ideal clients for me, so I'm trying to grow a real estate niche. So an ideal client there would be if you own some properties. Doesn't have to be a lot of properties. Could be, one little house you rent out. But if you own property, and if you either don't have a tax professional helping you out, or you don't like the one you have, absolutely reach out to me. Actually, one of your other guests happened to mention this too. They didn't refer to it as small business. They referred to it as local business. And I love that, because small can kind of be almost like condescending, right? Because you're saying,
Right.
It's tiny, right? Whatever. I like to work with the local businesses. So if you have a business that's, involved in your community, and you need help with your taxes, or you just feel like your CPA is kind of absent, I'm your guy. I pride myself on making sure that I'm always reachable, and that, I'm always doing what's best for my clients. And I don't ever want a client to think that I'm not answering their emails or their phone calls or whatever when they need me.
Do you do like a free, initial consultation? And what would somebody need to share with you for you to get a picture of what they should do? Do they show you a return? Or?
Yeah. So depends on where you're at. If you're doing a startup, we absolutely can sit down, and it's totally free. Maybe we'll have lunch, whatever.
Yep.
And we'll talk about what your plan is for your startup and how to get to where you want to get. If you already own a business, or even if you're just an individual that needs help, we can look at the last couple of years of tax returns, totally free. And I'll go through and say, okay, well, I noticed X, Y, and Z on your returns. We probably could have done that differently, and maybe we can amend it and help you out, or maybe it's just something we'd fix going forward. So definitely I can do free consultations.
Awesome.
And if anybody wants to reach me, they can do it by phone. I have a line for the business. It's 860-552-7600, or by email, ryan@elbleincpa.com.
Awesome, man. Listen, last thing I'm going to ask you is what are some words of advice that you would give for somebody thinking about starting their own thing?
Yeah, so the biggest piece of advice that I can give anybody that's sitting out there thinking about starting a business, if you were looking for a sign to start your business, this is it. Start today. Because if I didn't have that friend come to my house and say, I need you to help me with with my taxes, I never would have started. It never would have gotten off the ground. I never would have got a client. But because he came and said, I need help with this, and I said, you know what, let's just do it. I'll start it up. I'll help you. We'll figure it out. So if you're thinking about starting a business and you've been thinking about it for a while, just start today. Take that step. Do whatever you got to do to get it going today.
Thanks, man. Thanks. This has been great.
Thanks for having me.
Yeah, absolutely. All right, man. All right, everybody. Thank you. Thank you for listening to this episode of Mission Control. This is Ramon Peralta, and until next time, we launch brands.
Thank you for taking this journey with us. To learn more about Peralta Design and our work, go to www.peraltadesign.com and subscribe to keep up with the crew.